All right, so I think everyone's in from the lobby. So again, welcome to our webinar on fraud and risk management strategies for business. The information that we will be sharing with you today is focused on business and commercial customers, but many of these strategies can apply in your everyday life. Just a few notes before we get going. All attendees' cameras are turned off, microphones are muted, and the chat is disabled. To ask any questions, you can submit those through the Q&A feature. This session is being recorded, so if you're not comfortable with that, then please disconnect from Teams now. Thank you. So I am Melissa Rayner. I am the Financial Crimes Manager for Northern Bank. I oversee a team of 6 analysts that are dedicated professionals. We all have considerable experience in the industry and are very committed to fighting fraud, protecting the bank, and protecting its customers. My career in banking began about 20 years ago when I worked as a teller while pursuing my criminal justice degree. Since then, I've worked in a variety of roles that have focused on anti-money laundering and fraud. I'm very passionate about the work that I do because I continuously see the impact that it has on my local community. A lot of my work relates back to the USA Patriot Act, which was passed following the September 11th attacks to help the government fight the funding of terrorism and anti-money laundering activities. The tactics employed by fraudsters are constantly evolving, so I've kept my industry knowledge fresh by maintaining my designation as a certified fraud examiner, frequently attending training events, including FBI Citizens Academy, and participating in networks like the International Association of Financial Crimes Investigators, which includes members from peer banks and law enforcement.
Thanks, Melissa. My name is Alinka Follis. I'm the Digital Banking Product Manager for Northern Bank. I've been in banking for about 10 years. 6 of those were spent at Northern. I've worked with a few different teams here at Northern. I got my start in cash management operations, managing commercial services and account openings. Did some time in deposit operations with wire transfers specifically, and then moved on to our business support team, assisting with real-time customer calls and really anything under the sun. But now I work directly with our digital banking platform. Melissa and I work somewhat closely. Financial crimes and digital banking tend to have a lot of overlap, which is some of what we'll be going into today. And I just want to take the time again to thank you for joining us today. Melissa and I are excited to walk you through this session, so I'm going to go ahead and get started. So financial institutions are at the very forefront of the financial crimes epidemic, and they continue to be actively engaged and invested in fighting financial crimes. In today's webinar, we'll share a brief overview of the current state of fraud and the impact on businesses. We'll touch on key risk areas for businesses to be aware of and explore fraud trends and the best practices you can put into place to safeguard your business.
So let's take a look at the numbers. If you or your business have not been victimized by a financial crime, unfortunately, it's likely just a matter of time. Sorry to be the bearer of bad news, but that's just the grim reality when you consider that 79% of businesses were victims to a fraud attack in 2024. Check fraud and business email compromise are the most prevalent fraud schemes to impact victimized businesses. 67% of companies recouped less than 50% of the funds that were stolen from them due to fraud. So when you take this into consideration, it's really important to prevent these fraud losses before the funds leave the bank. Unsurprisingly, there is a direct correlation between economic uncertainty and increased fraud volumes. An example most people can relate to or are familiar with would be the exploitation of the COVID-19 pandemic assistance programs. In In 2024, the SBA estimated that there were $136 billion in fraudulent economic injury disaster loans and $64 billion in fraudulent PPP loans or Paycheck Protection Program loans. So given the current economic climate, we wanted to share some scams with you that you should be mindful of, which include government impersonation. Criminals may impersonate government officials, such as an IRS agent, demanding to collect what they say is unpaid tax debt, or they may encourage you to apply for a special assistance program with the intent of just stealing your personal information. There's also tech support scams where you may receive a pop-up on your computer, which ultimately installs malware on your machine. There is also investment fraud schemes that trick victims into investing money based on false promises or for a high return on your investment. We also see unemployment scams. Your own employees could be a victim of identity theft with a false claim submitted in their name, which would ultimately impact small business owners or employers because this would have the downstream effect of increasing their state unemployment tax rate and increase your tax payments. There's also ransomware, which encrypts the victim's data and demands a ransom payment in exchange for unlocking the data. We've seen this in the news as recent as yesterday. There was a kidney dialysis clinic that was victimized by ransomware. Fortunately for the clinic, it didn't impact patient care because they were able to quickly rebound, but there have been incidents where hospitals have had to halt operations and it did impact their ability to provide care. And we also see credential stuffing, which is a cyber attack using a list of commonly used passwords against user accounts to gain access to company data with the intent of stealing personal information of either employees or your customers. This type of attack used to be done by humans, but fraudsters are now able to employ generative artificial intelligence bots, which make these attacks exponentially larger, faster, and harder to detect.
So as a financial institution, we most commonly see fraudsters aiming to get funds, financial information, and customer information. But depending on the type of external threat, they could be trying to steal intellectual property, employee information, or even medical records. Businesses have funds, but also have access to employee, vendor, and customer information, which can be leveraged by fraudsters to conduct more scams. External threats aim to steal information, put viruses or malicious code on your machine, disrupt your business. And sometimes this is to pursue a social or political agenda. There are several common risk areas for businesses. As experts in the financial space, we'll be focusing on cybersecurity and data breaches and occupational fraud and financial misconduct.
So we will take an in-depth look at 3 types of cybersecurity fraud and data breach trends, which includes spoofing and account takeovers, phishing and business email compromise, which has a variety of subcategories, including CEO impersonation and vendor payment manipulation. And we'll also take a look at mailbox theft or USPS theft, which it's not quite cyber, but there's been a resurgence of this old school fraud method, which still results in a breach of your account information. So spoofing and business account takeover often occur back to back. Spoofing is essentially a technique where a communication, whether it be email, text, or phone call, appear to come from a trusted source like a colleague or a legitimate organization. Scammers use the spoofed caller ID or spoofed email addresses and phishing attacks that can trick victims into sharing sensitive personal information or click on dangerous links that may install malware on your machine. So when we think about what are fraudsters doing, in 5 quick steps, they can control your entire account. So first, fraudsters will call customers pretending to be employees of the bank. They could use fake names, or they may even use real employee names that they've found on social media like LinkedIn. Second, they'll tell a customer that their account has had recent fraud or that their online banking needs an urgent malware update. Then they'll ask the customer to provide the security code that they've received via text message, which is the multi-factor authentication code to enable login. This is a huge red flag, and if you remember one piece of information from this webinar tonight, I would really want it to be that you should never share your multi-factor authentication code with anyone over the phone or through email or text. Especially Northern Bank employees will never ask you to share that code. Once they've received that information, the fraudster essentially has gained full access to your online banking account. They'll often tell customers to stay out of the online banking platform while a fix is being applied, and it's during that time frame that the fraudster may attempt a password change, a change in contact information such as the phone number, email address, or mailing address on file. And they will also initiate either an outgoing wire transfer or an ACH payment. And we've also seen instances where they've attempted to manipulate existing bill pay templates to alter the beneficiary account instructions. So red flags that you should be on the lookout for would be emails with slight variation in the domain names. For example, rather than nbtc.com, you might see ntbc.com. Sender email addresses that mimic a legitimate company email. Any urgent or threatening language that's demanding immediate action, that should be a huge red flag. That's very common, especially if any of those emails or notifications are received toward the end of the business day and put you in a time crunch to initiate a transaction before the end of a business day. Any requests for sensitive information via email, unexpected changes in payment instructions, or inconsistent email formatting or language.
Yeah, so some of our prevention and protection strategies to sort of combat those red flags include implementing domain-based message authentication, otherwise known as DMARC. So DMARC is an email security tool that helps prevent scammers from sending emails that look like they're coming from your domain. It helps protect your brand and helps keep phishing attempts out of inboxes. There's also email authentication protocols like SPF and DKIM. So SPF, or Sender Policy Framework, it's sort of like a guest list for your domain. It tells email providers which servers are allowed to send emails on your behalf. And then DKIM, or Domain Keys Identified Mail, adds a digital signature to your emails so recipients can confirm that the message really came from you and that it wasn't altered in transit. We also recommend creating a formal communication verification protocol and training employees to verify sender identities. And then one of the steps that we kind of take for you within our online banking is establishing multi-step verification for financial transactions. So you'll see throughout our online banking, there are certain high-risk transactions and changes that require multi-factor authentication. This is an important step that ensures the security of your transactions, so we recommend turning this on whenever possible.
So in business account takeover, not only does somebody breach the account, but they just completely take it over. They have access to the recovery emails and any backup emails. It certainly will be used for financial crimes and additional phishing attempts. Some key statistics for account takeover fraud would be that in 2021, 22% of businesses reported an account takeover. In 2023, that increased up to 29%. The average loss for a business is about $175,000, so that's pretty substantial. 35% of account takeovers target financial and operational accounts. For significantly impacted accounts, recovery time can average between 3 and 6 months. This can be due to sunsetting the compromised or the affected account. Also, the need to set up or establish the new account, along with any reoccurring payments that you have set up. And this 3 to 6 month time period can also include waiting to recover funds from other financial institutions. So red flags that you should be on the lookout for would include unexpected password reset emails, an unexpected multi-factor authentication code that may come into you through text. If you're not logging in and you receive one of those multi-factor authentication codes, that should be a trigger for you that something might be wrong. Any suspicious login attempts from unfamiliar locations, unusual account activity occurring outside of normal business hours, transactions with new or unrecognized devices, any sudden changes made in account permissions, or unexplained financial discrepancies.
So as far as prevention strategies go for this, again, touching on multi-factor authentication, huge piece in this. We have that enabled within your online banking, but on some platforms it's optional. So where it's an option, I would recommend checking it off. Training employees is another big one. If you're able to identify it before anything happens, pretty surefire way to stop fraud. Within our online and mobile banking, we have additional options for you. So we have alerts that are real-time account activity alerts. Those are set up within your settings page. You can set them for universally everything. So between like profile changes, certain transactional processes, really anything that's there, and through different methods too. So a text message, a secure message, an email, really whatever works for you. And then creating meaningful user roles. That's another one for us. Typically, not everybody within your business needs the same level of access, so creating those controls internally. We have two systems that kind of work hand in hand that monitor your accounts and your online banking at all hours, called Q2 Patrol and Sentinel. So they're looking for anomalous activity, something that strays or deviates from your normal activity within online banking. That can look like a suspicious login somewhere out of the country, out of the state, something that's just not quite normal for you. And then it also takes a look at transactional information. So if something changes drastically there, that might alert us or send an alert to you. Monitoring account access, sort of side by side with managing user roles and creating meaningful user roles. And then wire verification, that's a big one for us. You go through the authentication step online of doing a multi-factor authentication code, but internally, we're always going to call to verify those wires because they are real-time transactions and they do carry a higher risk.
So an example I can offer regarding business account takeover, shortly after the bank's migration to the Q2 online banking platform, the bank did experience an increased volume in business account takeover incidents. These were caused by spoofed caller ID phone calls that appear to be originating from Northern Bank's contact center. If you're a regular user of the online banking platform, you may recall seeing the alerts on our website and on our app's login screen warning customers not to share their multi-factor authentication code. The timing was a bit unfortunate for Northern. Our customers, as well as our employees, were still adjusting to the new platform. But I assure you, this event was not exclusive to Northern Bank. There were numerous banks in the Boston area that were targeted simultaneously. Banks are typically pretty competitive with each other, but fraud is one area of banking that is highly collaborative behind the scenes. So during this time, we were actively strategizing with our industry peers to combat the fraud and spread awareness. The folks that work in financial crimes, we don't want to see fraudsters profit a single dollar. It doesn't matter which bank may take the loss. We don't want to see any losses at all. So these collaborative relationships can be incredibly powerful when it comes to the recovery of any stolen funds. Having the ability to just pick up the phone and call an investigator at a peer bank to quickly request that they place an immediate hold on an account that may have received fraudulent funds, that can dramatically increase the likelihood of recovery for our customers. And as Elaine just mentioned, with the migration to Q2, it came with the added feature of Sentinel and Patrol for the login and transaction monitoring. So during the initial time frame of increased volume of spoofing incidents, this feature was still in learning mode, but currently it's now in active mode. When it was in learning mode, the system didn't suspend any unusual transactions. So the system is now able to suspend suspicious transactions, which we monitor throughout the day. And if we're not able to verify something independently, the bank may reach out to you just to verify that a payment is legitimate and make sure that your assets are, protected.
So in business email compromise, also known as email account compromise, cyber criminals are increasingly targeting small businesses through sophisticated email scams that impersonate company executives, vendors, or trusted partners with the intent to initiate fraudulent financial transactions. This scam is frequently carried out through social engineering or computer intrusion with the intent to conduct unauthorized transfers of funds. Oftentimes, business email compromise variations involve compromising legitimate business email accounts and requesting employees' personally identifiable information in order to compromise other accounts that may be related to other scams. For example, someone posing as a human resources employee may ask to validate a social security number, date of birth, or similar information. CEO impersonation is a common element of business email compromise.
So red flags that you should be on the lookout for was similar to before: any urgency or pressure to act quickly without verifying, any unexpected emails or emails that have suspicious attachments or links. Those are just things that you should keep in mind as you try to avoid this.
You'll notice a lot of these prevention techniques overlap with each other. So one of our main ones is employee training. Again, just educating your team to know what to look for and what the flags are. It can start with sending them this webinar once it's emailed to you. But just getting some sort of program in place for them. Audits, that can be internally. You also have the ability to do that within your online banking. That ties back to our user role point of creating this sort of separation of duties, separation of access. You're able to pull audit reports to see almost every click that someone makes within your online banking account. So if you need to track something down or need to make sure that things are going as planned, you can do that. Keeping software up to date is a big one. Usually only takes a few minutes to update. Most of the times those updates are for security patches where vulnerabilities were discovered. Multi-factor authentication, again, just creating that extra step, making sure that a security code is being delivered to you, not sharing that security code, as Melissa said. And then secure email gateways, which sort of act as a filter. They analyze incoming messages for signs of fraud or spoofing.
So just a quick example here of some of the pop-ups that you may encounter related to a tech support scam. The graphic on the left was prepared by Microsoft, so none of those pop-ups that you see displayed there, none of them are legitimate. And then many of these scams often direct victims to submit payment via Bitcoin ATMs. So we've included an image on the right of an Bitcoin ATM, which notably has a sign right next to where the cash deposit slot is that reads, caution, if the FBI, police, bank, Microsoft, Apple, etc. directed you to this ATM, it is a scam, hang up and ask for help. So the thing that is really wild is even with signs like that, literally right next to where you insert the cash, we still see victims proceed because the fraudsters can be so convincing. And the sign says hang up and ask for help because oftentimes they will still be on the phone actively with the fraudster who is yelling at them, screaming at them, and just having them so concerned that they're in trouble because they didn't pay their tax debt or things like that. So with CEO impersonation, again, we should be cautious when there's urgency or aggressive language. Is there a problem? Aggressive questioning. Scammers will often make excuses to avoid answering certain questions. Requests that arise when the CEO is traveling or unavailable are particularly common. I can't tell you how many times I've seen in an email that the CEO has, reported, I'm on the golf course right now, supposedly. And any requests to send wire transfers near the cutoff time at the end of day. They're really trying to force you to cut corners, essentially, and any internal controls that you may have in place, they're trying to have you, circumvent those controls.
So this one definitely has to do with employee training in terms of prevention, just making sure your employees know that they're able to verify through secondary channels to verify that this request is legitimate. Like Melissa said, high stress situations, sometimes people just act. So just sort of empowering them and creating those training plans for them to know that they can ask and verify. We do have the fallback of online banking alerts, which I think are great. Again, this goes for changes and transactions, but it kind of lets you monitor everything. You can set up alerts that will tell you if a payment's changed, if a vendor's changed, if something went out. And those alerts come right away. And if you see something that looks a little bit off, you can always give us a call. And then sort of layering on top of that, if something suspicious or out of the ordinary does come through, we do have those two systems that are constantly monitoring your online banking activity, Q2 Patrol and Q2 Sentinel, working together to protect you and make sure that your funds aren't going out when it isn't a legitimate transaction.
So I have, some example of, an email thread involving a CEO impersonation. In this particular case, the CEO's true email account had been hacked, so the recipient of the email wouldn't have been able to pick up on, a spoofed email address that was slightly altered. And if you look through the emails, it just appears to be an ordinary work conversation. There's nothing particularly remarkable about it. This is one of the reasons when we do perform customer outreach for flagged transactions that may have been picked up in Q2's Sentinel or Patrol monitoring, we really insist that the customer verify any changes to beneficiary account instructions verbally with the beneficiary. Again, referencing this example, if Ben had called Steve, who was the CEO, or stepped into Steve's office to verify the change in the beneficiary's account instructions that day, it would have uncovered the scheme before the payment had gone out. Fortunately, especially considering that this case was for over $150,000, fortunately, we were able to secure full recovery of funds for this customer. So with vendor payment manipulation fraud or altered beneficiary account instructions, some red flags would be any changes to the vendor's contact information, any unexpected invoices or billing discrepancies. Again, as we're talking, the heart of the matter here is the altered payment instructions. So any change to the payment methods or bank accounts, if a vendor always requests payment by ACH and now they're changing it to a wire at a different bank, that should be something that should cause you to take pause and reach out to that vendor just to verify that the change is legitimate. And any communication that seems slightly off or unusual. It used to be that these emails would have a lot of spelling errors. You could tell that English was not the person's first language, but now with AI and Chat GPT, it's so much easier for them to really mimic the true voice of the email account owners. So any communication that does seem off, that should be something that kind of jumps out at you.
Yeah, for sure. So kind of heading back into prevention, employee training is super important here in that we're teaching our employees to verify changes in payments. I think this is one that we see a fair bit. I mean, working in support teams, these types of things came through fairly often. So just making sure that employees are verifying any change in information, also making sure that they're calling a known phone number or reaching out to a known person. Sometimes when these sort of payment changes come through, they're coming through fraudulently with fraudulent instructions, but also with fraudulent contact information. So that's where being alert and questioning, verifying through secondary channels comes in, just making sure. Again, with online banking, you have the option for alerts. It can be as specific as you require. And then with certain high-risk events, sometimes they're turned on for mostly profile changes and things that are sort of protecting you from your online banking being compromised, but you have the ability to turn them on for yourself for vendor changes. But those are enabled by default for you, and they're not able to be turned off because we're just trying to make sure that you're protected there. And then Patrol and Sentinel is really the backbone of our security measures within online banking. So constantly monitoring for suspicious logins, transactions, and other online banking events. And they continuously learn too, which I think is super cool, how you utilize our platform, which helps identify what's normal and what's not.
So an example of phishing or business email compromise, I worked a case about 10 years ago when BEC was first emerging as a financial cyber threat. And in this case, the victim had received an email from a realty company with payment instructions for her to submit the down payment of about $80,000 for the purchase of her first home. So much like the emails that we just showed with the CEO impersonation, there was nothing particularly remarkable or unusual from her observation. This case also occurred kind of long before transaction monitoring software had the ability to provide real-time alerts like they do today. So with this case, I don't remember the outcome, but what became a core memory for me was just her reaction of, absolute devastation when I'm delivering the news to her that her money's gone. Essentially what was her life savings was gone. So with that, really want to impress upon you that victims of a business email compromise should do a handful of things immediately upon becoming aware of the fraud. First, you should call your bank and ask them to recall the wire or ACH transaction. Second, you should contact your local field office for the FBI. Our commercial client base is throughout the United States. For those of us who are local to the Woburn area, that would be the FBI Boston field office. Third, submit a complaint through ic3.gov, which is the Internet Crime Complaint Center. The FBI monitors the complaints queue on a regular frequency throughout the day. I believe it's every 4 hours they're checking in on reports. A complaint through ic3.gov can garner the attention and result in assistance from FBI's recovery asset team, which can be instrumental in the recovery of funds. They utilize a process called the financial fraud kill chain, which works domestically. They also can involve Interpol for international wires. This has a significant impact on the recovery. Certainly when we call our peer investigators at other financial institutions, they'll react pretty quickly, but they react a lot quicker when it's a special agent from the FBI. Excuse me. Moving on to the mailbox or postal theft. This is when fraudsters are stealing mail directly from those blue bin mailboxes that you see on the side of the road, or even postal vehicles. It's been on the news pretty frequently lately, where you see the letter carriers being attacked for their arrow key, which allows fraudsters to essentially break into the blue bin mailboxes and take everything that's in there. If they're not that brazen, they are using, whether it be a bottle, like in the image on the right side of the screen, that is covered in like a sticky or a tacky material, and then they're dropping that into the blue bin mailbox. It's attached to a string, so they'll drop it in, it's sticky, and the letters or envelopes will get stuck to it, and then they'll pull the mail out, which often will be, people mailing a check to National Grid to pay their electric bill, things like that. Then they'll take those, checks, which typically small dollar, it could be, $48 or something to pay your monthly electric bill. They'll wash those checks and alter the payment instructions. So they'll alter who it's made payable to. They'll alter the dollar amount. Typically, they hover around about 48 or 4,900, just below 5,000, because they know that $5,000 is often a trigger for additional supervisory overrides in banking. So they'll hover just slightly below that. Counterfeit keys can also be used to access cluster mailboxes, like in apartment buildings. And we also see where mail can be redirected through fraudulent change of address forms. So some red flags that you can look for with this situation: certainly damaged or tampered mailboxes. Any time you have a payment that you may have issued that hasn't been processed yet, or you're expecting it to be processed and it hasn't come through, or the payment has been processed, so it's cleared your bank account, but for example, you haven't seen a credit card payment applied on your other account. Account statements or collection notices for accounts that you didn't open. Those should be a pretty big red flag for you.
Some of our prevention tips, informed delivery from the USPS, really anything with tracking, I think helps. I think Melissa would probably agree that we would recommend avoiding whenever possible, using the blue bins, digital payment methods when possible. If you do have to use one of those mailboxes, sort of safeguarding yourself with something internal to track those items that are going out. So for businesses, we have the option for check positive pay. It's an automated fraud detection tool that can be applied to both check and ACH payments. ACH payments aren't particularly targeted by mailboxes, but still full protection on your account. Anything that falls outside of your authorized item list shows up as an exception for you to manually decision. And then we also offer payee match, which ensures that the name is valid. Sometimes when we see these items, they come through with a valid check number and amount, but the name is altered. So super important there. So that system automatically compares those. And then if something doesn't look right, it sends it off to you to approve.
And I do want to offer that the U.S. Postal Service is making a lot of effort to improve dual control, especially when it comes to those arrow keys. They're also actively working to deploy new mail trucks and install protections, implement protections wherever possible. There are several United States postal inspectors in some of the fraud network groups that we belong to, and it really is affecting their ability to recruit employees to be letter carriers because a lot of people just aren't willing to take on that risk. Of literally, there's lots of videos and news stories out there of letter carriers being physically attacked violently to get a hold of those arrow keys. So my mailbox postal theft example, I'm throwing my mom right under the bus with this one. And Mom, if you're listening, sorry, love you. So she had a mortgage payment that she mails every month. I often tease her about not taking advantage of online banking bill pay. And she had mentioned to me that the check hadn't posted to her account yet. So naturally, doing what I do for a living, I warned her that the payment had probably been stolen out of the mailbox and that she should reach out to her bank, get a stop payment on that check, treat her account number as if it had been compromised. But she just thought I was being an alarmist. So she didn't follow my advice. And unfortunately, the check posted to her account a few weeks later with an altered payee name and a substantially larger dollar amount. The reason why I was trying to impress upon her that she should, listen to her super smart financial crimes investigator daughter was because checks are subject to the Uniform Commercial Code. So when situations like this happen, the only way to recover funds is through a bank-to-bank claim. And in these situations, the bank of first deposit is liable for reimbursing the victim. The thing that is challenging with that is when we initiate one of these claims for an altered check on behalf of our customer, we have no control over when the bank of first deposit responds. So we've seen times when these claims can take up to 6 months or even longer for funds to be returned, which is really painful for everyone involved and just a big headache.
So occupational fraud schemes fall into three primary categories: asset misappropriation, corruption, and financial statement fraud. Um, it's an estimated 5% of annual revenue loss to occupational fraud and financial misconduct. Small businesses specifically lose approximately $200,000 per fraud incident. And then internal fraud accounts for 40 to 60% of total business losses. Some of the key loss vectors are employee theft, expense account manipulation, payroll fraud, vendor billing scams, and financial statement fraud.
So asset misappropriation is the most common category of occupational fraud, occurring in 89% of the cases studied by the Association of Certified Fraud Examiners in their 2024 report. It also causes the lowest mean loss at $120,000 per case. So asset misappropriation kind of falls into two key categories, which includes cash and inventory and other assets. So cash misappropriation can include, the theft of cash on hand, the theft of cash receipts, including, kind of skimming, and fraudulent disbursements, which may include billing, payroll, expense reimbursement schemes, check and payment tampering, or register disbursements. And then inventory misappropriation can include, the misuse of assets, the misuse of inventory, or just larceny of the inventory. Corruption occurred in nearly half of the cases that in the ACFE study, with a median loss of about $200,000 per case. And then financial statement fraud is the least common, but it is the most costly to organizations when it does occur. So the fraud triangle is a framework that's commonly used to explain the reason behind an individual's decision to commit fraud. So if you just take a look, there's opportunity, which, could be that there's just no oversight, or their area is not monitored for the employee. There's rationalization, which can be, I haven't gotten raised in a long time, they owe me for this. And then there's pressure, which could be, that an employee may have an addiction or gambling problem, or just, any other kind of financial pressure that they may be under. Another commonly used fraud concept is the 10-80-10 rule, which suggests that 10% of employees will never engage in theft. 80% could be tempted under the right combination of the, opportunity, motivation, and rationalization. And then 10% are actively looking for chances to commit theft. So you should consider the fraud triangle as you evaluate your fraud prevention strategies and internal controls.
Well, and Melissa takes my first bullet point of establishing internal controls. I think she said it best. Sort of considering her last slide, important to make sure that you have those controls in place. You have, through our next bullet point, separations of duties, and you also have the ability to conduct audits. I can speak on the front of online banking and conducting audits and separation of duties. We have the ability out there for you to create dual controls situations, where that's transactional or not. Anything that you're looking to do within our platform, let us know. And there's probably a way to do it, and if there's not, we can actively seek that out. Providing fraud awareness testing, and then creating meaningful user roles. I harp on this a lot, but our user roles allow us to create specific access for those people's roles. You can limit almost everything, or I shouldn't say limit, we can customize things. So you can customize view, withdraw, deposit rights. You can customize the limits. Again, requiring multiple approvals. You can even change the way that they're able to view online banking. And what exactly they is visible to them, whether that be payment templates or other account information or activity. If you want to get super granular and super secure, you even have the ability to monitor what hours they're transacting, what locations they're transacting from, or if you have a certain set of authorized IP addresses, you can plug that in there as well. And then early detection is critical to limiting the amount of damage to the organization. If caught within the first 6 months, the median loss is $30,000 compared to $250,000 for frauds that lasted 2 to 3 years.
And one other very simple prevention strategy would even to be, Googling new applicants, especially for small businesses. There's a woman that is local to the Billerica, Chelmsford, and Wilmington area that works as a bookkeeper for small businesses. And over, probably a 10-year period, I had 3 cases with this same bookkeeper who just bounced around to a new job that she embezzled from every company, and the losses were substantial, in the hundreds of thousands of dollars. And in terms of recovery, there's not much that you can do through the bank. If you initiate a check claim against a bank, you're not going to get very far with it because, if you've given over a facsimile stamp to this person, you've given them the keys to the kingdom. The only other, avenue for potential recovery would be possibly an insurance policy. So you're better safe than sorry to stop it before it happens. The only case that I ever had to testify for was an embezzlement case that it was tried in Woburn District Court, and the business owner, the claim by the bank was denied. Not this bank; it was my prior employer, and then his insurance claim was also denied due to negligence because he didn't have appropriate internal controls. So his only avenue for recovery was, criminal charges against the perpetrator, and he was successful with the criminal charges, but I doubt he was successful with recovery because, essentially you can't get blood from a stone. Once they have that money, they're spending it and it's gone. And there's also Commonwealth versus Kim Henry. Was a precedent set with that ordering restitution in a criminal trial to a person that has been deemed indigent. So if they're unemployed, they'll be deemed indigent. They can't enforce restitution on those criminals. So essentially, the trial courts are saying, yep, they did it, they're guilty, we're not going to make them pay you back. So that's, extremely challenging. And then, as we start to wrap up, we've got some resources on this slide here that we wanted to share with you, where you can find some additional information on building out best practices for your organization. These will be shared via email along with the webinar's recording next week. We just wanted to say that it's been a pleasure to share our knowledge and expertise with you today. If you have any questions at all about your individual situation, please reach out to your relationship manager or contact center at mbtc.com. Our team members will be happy to help you or find the right person or get you connected with us to help answer questions for you. And thank you for joining us today.
Thanks, everyone.